Good morning, everybody. Today is Tuesday, I almost said Monday, January 20th. And welcome to the day after a holiday. Always exciting stuff happening over the weekend. So we'll get right into it here. If you're new to the channel, hit that subscribe button so you can get some future notifications on video announcements, and then also smash that thumbs up button and like this video. Hey, good morning, Anthony. Let's go into economic data. Just kind of a refresher what I did yesterday for the pre-market review, the week ahead of review rather. Nothing for today. For tomorrow, Wednesday, we have President Trump speaking at 7:30. They were all at a conference in Davos right now. So there's all the heads down there for the economic convention happening right now. So we'll find out what's happening there. I think all the downside that's happening right now is due to Greenland and Trump's announcements on being aggressive with tariffs right now, because I think he aggressively wants to take over the territory of Greenland right now, and I don't think he's going about it, or his actions right now are going to be in the kindest ways right now. I think he's going to be more aggressive right now, going after it right now. So I think that's what the markets are kind of reacting to at this point. You have pending home sales tomorrow at 9 o'clock, construction spending, nothing else there. Thursday, final GDP quarter over quarter, and unemployment claims, PCE index. And Thursday, personal income month over month, and spending month over month. I don't see anything else that should impact things on Thursday. Friday, you have some red folders that are going to be happening in the European markets that may impact our markets as well. 8:45 after the market opens, you have flash manufacturing PMI, flash services, and University of Michigan consumer sentiment at 9 o'clock on Friday. That'll wrap up the economic data for the week. Let's go into it. Actually, there's some earnings this week I wanted to go over as well. Today, after the close, you have Netflix, United Airlines. Let's see what else we have here. Interactive brokers. I don't see anything else. Wintrust, maybe. 3M before the market here. I'm not sure if that came out already. Tomorrow, before the market, Johnson & Johnson, Charles Schwab. That should probably be pretty telling as far as the investment side of things go. After the market tomorrow, I don't see anything here earth-shattering there. Thursday, one thing that sticks out, Intel after the close. Intuitive Surgical, Capital One. Excuse me. After the close, GE before the open, Procter & Gamble before the open, of course, Abbott Labs. I don't see anything else sticking out for the rest of the week. That should be it for the earnings calls for this week. So let's see. You have, good call, Anthony. There's still the Supreme Court is still talking about the tariffs with the rulings. So that's still, that ruling is still waiting to come out at this point. So we'll see what happens with that. I don't think that if they roll them back, I think that that's going to be kind of a short-term mess. So we'll see what happens with that. So let's get into the broader markets and see how they're responding right now. So they're still, we started with a little bit of a sell-off. Here's the ES yesterday. So we lost the 50-day SMA yesterday. Actually, this morning we lost it. So there was trading yesterday in the futures market. That was the only thing that was open yesterday were the futures. There's a gap down here. So this orange little rectangle that a large rectangle that I have here is a gap down. So I leave that there until the market comes back and fills that gap. But you can see right now we're losing some moving day averages here. So yesterday on the gap down, you lost a 20-day. That blue line right there is a 20-day moving average. And now this morning we're losing the 50-day moving average. So we had a gap down yesterday morning, and then there still seems to be some aggressive selling still happening right now, pre-market. So sellers are still there. We are still above the 100-day SMA down here at 68.2886 for the ES. By the way, the 50-day SMA is sitting at 68.9381. The 20-day SMA is sitting at 69.5323. So I would anticipate at this point right now, the way that you played today, I would not go chase this into, this is pretty. I think that there's a lot of emotion in this right now. I think people don't like uncertainty. So I would not, when the market opens, I would not be selling into this right now. However, that being said, one way to play it is let the market settle in a little bit, and if you get a little pop into this gap down here, maybe wait till it pops up. If you get above the 50, maybe even the 50, you could sell into the 50. Or if it regains the 50 and then you pop up into the 20, maybe you can sell into the 20. But right now it's a bearish sentiment for sure until things can get ironed out here. So we knew that going into this year it was going to be a volatile year. There's just too many things that are hanging in the wings right now between the tariffs, this Greenland, some political, GOP political stuff happening right now overseas. Nobody's talking about stuff that's happening in Iran right now. That's volatile. That combined with you have midterms that are coming up this November. And so I think that there's going to be a big push for this administration right now to get their policies done right now. So they have less than 10 months right now to push through their agenda right now, because if they don't get it through right now and they lose either the House or the Senate, it'll be a stalemate for a couple of years, which is pretty common whenever you have an administration that has all three, the presidency, the House, and the Senate. So let's get into the NASDAQ right now. So anyway, so playing these levels right now, I would not be selling into the open right now. I would wait for the market to possibly pull back. Maybe a little pop and fade into these levels up here. Your first level would be the 50. If you're going to go higher, you're going to have to regain that 50 first. But, you have a low here from January 5th, a weekly low, 68.9950. That could be a level, a break of that 50, break of that low popping up in there. That could be a good fade level right there. Or you let the market sell off in here, and you can come down here into September of 2025's highs. That could be a level of a break and retest of that level, right? So you broke that high, you're coming back down here. You see how it can respond there to take yourself along to move yourself higher, right? If you lose that September 2025 high of 68.14.5, you can come down here to 67.71.5, which is December's low. That would be another level of support there. Below that, if you lose that, and you're coming down here down to this August high of 66.39.25. So let's get into the NASDAQ. That's it on the downside right up there. And I already told you about the upside right there. So I think right now, the way these play these markets right now, you really have to have your finger on the pulse with the news, because any news that comes out right now is really going to, spike the market one way. It could spike the market. In a big rally right now. Everybody's, there's blood in the water right now. Whenever there's blood in the water, it can reverse pretty quickly right now. So that's something you have to be prepared about. So I would not get married to positions if you're a scalper, and just, get in and out of your positions. If you are a long-term buyer, these are creating some decent opportunities for you. If you have that Warren Buffett mentality where you're buying something to sit on for about 10 years. So they are creating some decent levels for you right now. So, we're still not that far away from the all-time highs too. So you have to consider that as well. So the pullbacks are not horrible right now. So, however, these gap fills right now is something to pay attention to right now. So, right now, like I said, maybe, continue sell off into these levels right here to pull, to take a long here, or if you get a push higher to take a sell and, to put, have some more pullback downside here. So let's get into the NASDAQ here right now. Again, if you're new to the channel, subscribe to the channel and also smash that thumbs up button. So let's go to NASDAQ here. NASDAQ, same thing like we spoke about yesterday. Gap down, further downside this morning. Lost the 50-day yesterday. Lost the 20-day on Friday, and 50-day yesterday morning. So we lost 100-day now on the NASDAQ. So that's a pretty big level, and we're losing the September high, 25,270.75. The 100-day SMA, we lost that this morning, 25,341.10. So right now we are holding September 15th's weekly high at 25,125.25. So that's going to be an important level to hold right now. So you're going to have to hold that level in order, to get some stability and move higher. If you lose that level, you're going to probably come and test October of 2025 weekly low of 25,053. If you lose that, you come down, and your next level of support I have is 24,887.75. That's December's low of the month of December of last year. So right now we are below all these moving averages. So the tech market right now is getting depleted pretty good. So in order to move higher, you're going to have to regain that 100-day SMA. And that 100-day SMA today is sitting at 25,330.09. And then if you move back, if you do regain that level, I would anticipate you're going to get some a little reaction here off of this 25,418.84. So again, same bias as I have with the ES. If the market pops up a little bit, I'd be looking for pop and fades, meaning that if the market pops up, I'd be looking for areas to short the market right now based on the aggressive selling that's happening right now. That being said, also looking for areas that, if you can continue to get some sell-off, you should be looking for some areas to go long also. So areas to go long would be previous highs. This is September 15th's high, right? If you do regain this September's, the month of September of 2025's high, that could be an area to go long, right? So there's all different ways to play this, but right now, clearly you're getting downside, but you have to be careful with this kind of a downside coming in off of a holiday weekend, and with the news that's putting a scare into the market, and that's making the entire markets fall without any kind of fundamentals behind it, and it's just kind of a fear fall that's happening in the marketplace right now. So let's get into Tesla right now. Again, if you're new to the channel, subscribe to the channel so you can get further videos, and hit that thumbs up button, like this video. So Tesla right now, we're looking at a 4-hour chart on Tesla here, and it is hanging right on this lower end of this regressional trend line at 422.12 was the month of December's low, and also right where it meets that regressional trend line. So this is a 4-hour chart we are looking at right now. So it'll be important for Tesla to hold this level for today. We are, however, below this 100-day SMA. So Tesla, as well as the NASDAQ, it lost all of their moving averages. So if you go here, you could see the 100-day SMA. We lost the 100-day SMA this morning. On Friday, we were talking about needed to regain the 50-day SMA in order to move higher. We thought we were going to get that, and then we lost that within the first 30 minutes of trading on Friday. So that long play was gone. And so now we're still having some more downside. And now this morning we lost the 50-day SMA. So I would say with Tesla, you're the same thing. You're looking for pop and fades right now for Tesla. Market popping up, looking for levels to short it. However, you are getting some levels of support, right? So this could be a level of support. If you do lose this 421.80 level that came down to, which was the pre-market low, I think you can come and test these. You come down here pretty quickly at 411.45, and then we can get into our point of control levels that we have open here. Let's go here and clean point of control. So we have a bunch of point of control levels that are open, and I talk about this all the time. I leave these levels open until they get closed out. So we have a point of control level. I know this looks a little messy right now, but just to show you, we have a point of control level open since September 11th of last year down here at 365.90. Okay, that's one of them. And then there's one even further than that from the early part of September at 333.78. So those levels are still open right now. So it's something to keep in mind. However, that being said, there's still open point of controls open on the upside too. So that's promising as well for the upside. So, but that's Tesla for you. Last year, I think Tesla had a $250 range. So you have to always keep that in mind with Tesla. It's not for the faint at heart. But that's why the way I trade Tesla just on I'm 100% cash on this account every day, right? Because anything can happen with Tesla. So as you can see right now with Tesla, it's stair-stepping down, but we are, following everything that's happening over the weekend with the tariffs and all. But you have to pay attention to these levels that are holding right now. So if we did come down when the market opens up, the market will open up in 45 minutes if it comes down here. And if we react and we hold this level here, 421.88, could consider maybe taking a long. But another level that's a pretty big level here, this is a year ago, January of 2025, 419.99's high. So just like a break and retest, we broke that high, and then the market's coming down to this level. So if you sell off and you come to this level, I would be interested in seeing how the market reacts to this level here to possibly taking a long, right? So that could be one of the trade setups today that I'd be interested in, right? So you have to be careful with that. This is not an open point of control for those of you who have been following my point of controls and how I mark them, because if you see right here, it came back up here in post-market and it touched that point of control. So the point of controls, I leave them open. If after the market closes and the market doesn't come back up and reach that level of point of control, then I would leave that open. But it did come back and it hit that level, so that level is closed. Same thing with this yesterday. Even though it was a holiday, I would have still marked this as a point of control level. But you can see right here, this would have been open, but we had this wicky candle right here. So to me, that closes it out. So I am not leaving that as a point of control right now. So right now, when we come in off a holiday like this, I like to let the market settle down, because there's all crazy stuff happening right now. You have these wicky type candles. Look at these. These are 15-minute candles. That means that the volume is light during these kind of candles right now. It's pre-market. So you got to let the market settle out. There's no reason to come into the market today and say, oh, I'm going to start clicking the mouse button. Just let it settle out, right? So that being said, let's get into the 5-minute opening range trade. Again, subscribe to the channel and hit that thumbs up button, like this video. So today, what I'm going to start with, my weekly expirations, which expire on Friday. So it's January 23rd. And I'm going to start with the $445 calls. So it's about where are we trading right now? So about $20, give or take, away from the strike price. So I have 4 days for that strike price to mature. So the premium price it closed at $465. It'll probably, based on where the market's opening right now, it's going to open up probably in the $3 range. And then on the put side, I'm going to have the January 23rd expiration. I'm going to have $420 puts. So these are going to open up a much higher, right? So they closed at $2.06. So the market closed right up in here, 437. So we're about $10 higher. So these will probably be double, at least, I would say. So we'll see. When the market opens up, I'll probably, I change my call and my put prices as the market starts moving and and the premium prices start to settle in. But the main thing I try to focus on, I want to make sure that my premium price that I'm trading is at least $3. And why do I want it at least $3? Because if it's less than $3, the premium price trades at a penny a trade. And I want to trade at least 5 cents a trade. So if you can see right here, it trades from $2.98 to $2.99 to $3, and then $3 to $3.05, and it moves for 5 cents. And why is that important? It's important because if I trade a one lot and I buy a one lot at $2.99 and I sell it at $3, I make it $1. If I buy a one lot at $3 and sell it at $3.05, I make $5. So I'm making 5 times my money. So that's why it's important to trade at least a premium that's at least $3, so you get a bigger bang for your buck, right? But anyways, if you go down in the description and you join our Discord community, you can come and join our live trading that we have going on for right now. It's free from 8:30 a.m. to 10 a.m. Central Time. And in there, I go over this 5-minute opening trade. And in this trade, I go over a basic strategy along with some other advanced strategies as well. And so in this strategy right here, this is a script that I have where it plots out the first 5 minutes of the trade, first 5 minutes of the hour. And why we use this as a base and a guideline is because this is the highest volume of the day. If you look down here, these are the volume bars, right? So you could see on Friday, this was the first 5 minutes of the day for Tesla. And it was 3 million shares traded, right? So in the next 5 minutes, you had 2 million shares traded, right? And then the third 5 minutes, the third 5 minutes was 1.2 million shares, right? So the first 5 minutes, your highest volume until the end of the day, where you get your biggest push. So you had 3 million at the first 5 minutes of the day. You had 1.6 million in the last 5 minutes of the day, and then you had the first 5 minutes of the post market. You had 5 million shares traded. So that's why you use the first 5 minutes as kind of a guideline to see where the market is going to trade. It gives you kind of a range. Now, it doesn't necessarily mean, okay, just because we rallied and we made a green candle that the market's going to rally for the day. No, but it gives you that range, and so then you base your trade off of that. So now what happens in the first 5 minutes of this trade of the day, this starts to generate, right? So this green bar starts to move as this candle starts to create and make a range. And then when it's done, this bar stays stationary the rest of the day. Not only does it stay stationary the rest of the day, it stays stationary off on my charts for all the previous days. So I can go back and analyze all the trades and find out and do my data, do my back testing and see, what times they work, if it was wiki, where your solid trades are. There's all kinds of things that you do based on your back testing, and that's how you gather your data, so you can make sure that all of your trade entries are where they meet all of your statistics, right? So anyways, getting back to it. So in the first 5 minutes here on Friday, you had a 439.19 for a low, 443.84 for a high, and it broke that, and then you could have gotten a couple dollars out of that, right? So I think and you rallied up to 447.25, and then later on in the day, you had a nice structure on the downside, and then you broke that low of the 439.19, and it came down to 435. You could have gotten another $4 on the downside there. And so how that pretty much translates is it translates into, on the premium price, when you're buying a premium here, it probably, based on the premium, the strike prices that I have here, for every dollar that these prices move, my premium prices probably move about 50 cents. So if this moved $4 on the equity price up or down, so like I have my puts down here on the bottom. If I buy a put, I want the market to go down. If I buy the calls, I want the market to go up. So if the market went down to $4, let's say, this premium price would move up $2. Right? So if it moved down $1, this would move up 50 cents. And that's how you monetize. The movement in the equity price. So, but if you come into the Discord, I explain it in more great detail to where I take my stops, where I take my profits, and my whole thought process on when I'm taking the trade. So again, subscribe to the channel if you're new. Hit that thumbs up button, like the video, go down in the description, and join our Discord community for live trading from 8:30 a.m. to 10 a.m. Central Time every day. If I don't see you there, I will see everybody tomorrow morning at 7:30 a.m. Central Time for pre-market live levels for the ES, NASDAQ, and Tesla. Have a great trading day, everybody, and talk to you soon.